Welcome back to the Block Analyst. In today's video, we're going to connect two major developments that could define the next phase of the crypto bull market. On one side, the United States is opening the doors of its $12.5 trillion retirement market to crypto. On the other, Bitcoin's on-chain data is flashing signals of an unprecedented supply shock. When you put these pieces together, the story is simple. Demand is about to surge, supply is shrinking, and the long-term trajectory for Bitcoin looks extremely bullish. Let's break it all down. Let's start with the political and regulatory side. Recently, U.S. lawmakers called on the SEC to implement President Trump's executive order that would allow 401k retirement accounts to invest directly into crypto. For those outside the U.S., 401k plans are employer-sponsored retirement accounts that hold trillions of dollars in assets. Traditionally, that money has gone into stocks, bonds, and mutual funds. But now, crypto is entering the conversation. Think about it. The retirement market is one of the largest, most stable, and long-term oriented pools of capital in the world. We're talking about a $12.5 trillion market. If even a small fraction of that money flows into Bitcoin, the impact on price could be enormous. This isn't just another short-term catalyst like an ETF approval. This is structural. It changes the way institutions, financial advisors, and everyday Americans think about Bitcoin as a legitimate, regulated asset class that belongs in retirement portfolios. Now, let's connect this with what's happening on-chain. Look at this chart from CryptoQuant. The purple line represents Bitcoin exchange reserves, the amount of Bitcoin sitting on centralized exchanges available for trading. The black line is the Bitcoin price in USD. What do we see? Since 2022, exchange reserves have been collapsing. Over 1 million Bitcoin has left exchanges during this period. And where is it going? Into cold wallets, long-term storage, and institutional custody solutions. At the same time, Bitcoin's price has been climbing higher and higher, recently pushing above $113,000. This is the classic setup for a supply crunch. Less Bitcoin available for trading, while demand is only increasing. And when you overlay the potential demand shock from retirement funds entering the market, you begin to see how explosive the situation could become. We've seen versions of this story before. Back in late 2020 and early 2021, Bitcoin's exchange reserves also dropped sharply, while institutional interest surged through companies like MicroStrategy, Tesla, and others adding Bitcoin to their balance sheets. The result? Bitcoin went from $10,000 to over $60,000 in less than a year. The difference now is scale. Back then, the demand was primarily from corporations and early institutional adopters. This time, we're talking about retirement accounts and trillions of dollars in potential allocation. That's a whole new level of liquidity that could enter the market. Combine that with today's exchange reserves, which are at record lows, and you get a setup that could make the 2020 rally look small by comparison. Now, let's zoom out. Globally, central banks are struggling with debt, inflation, and slowing growth. Investors are searching for assets that are scarce, decentralized, and resistant to inflation. Bitcoin is increasingly being seen as digital gold. Add to this the fact that supply issuance is capped. Only 21 million coins will ever exist. The halving in 2024 has already reduced new supply by 50%, making the shortage even more pronounced. So here's the macro picture. Trillions in potential demand from U.S. retirement funds, shrinking supply on exchanges, global macroeconomic uncertainty pushing investors towards hard assets. That's not just bullish, that's historic. Of course, nothing moves in a straight line. There will be corrections, volatility, and moments of fear along the way. Regulations can change and adoption takes time. But the long-term fundamentals are aligning in a way that we haven't seen before, and that's why many analysts believe we are entering a powerful bullish phase for Bitcoin. And remember, this video is for educational purposes only. It's not financial advice. Always do your own research and make sure your investments align with your own risk tolerance. This is the Block Analyst, bringing you clear, data-driven insights into the crypto markets. If you found this analysis useful, make sure to like, subscribe, and hit the notification bell, because the next chapter of Bitcoin's story could be the most exciting yet. Stay tuned, stay informed, and as always, keep analyzing the block.